Good afternoon, ladies and gentlemen. Welcome to Billionbrains Garage Ventures Limited, popularly known as Groww, Q2 and H1FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the management's remarks. Please note that this call is being recorded. Additionally, please note that this earnings call is scheduled for a duration of 45 minutes, and we will be starting directly with the Q&A session right after a few words by Lalit. If you wish to ask a question, please use the raise hand feature available on your Zoom dashboard. We will announce your name on the call and unmute your line, post which you can proceed with your questions. We will wait for a moment while the question queue assembles. Ladies and gentlemen, I now hand the call over to Himanshu from Bank of America. Thank you, and over to you, Himanshu.
Thank you, Michelle, and thank you everyone for joining the call today. It's a great pleasure to host the management of Groww for their first post-IPO results call. Before I begin, I would like to read out a standard disclaimer from Bank of America. The opinions, statements, and other information provided today by Groww management are not the opinions, statements, or information of BofA Securities. Such opinions, statements, or information will be based solely on publicly available information and not in breach of any confidentiality obligations owed to the third parties. Please note that BofA Securities are not providing any financial, investment, legal, tax, medical, or other professional advice, and in particular are not providing any advice or view with respect to any securities or financial instruments or the advisability of investing in, purchasing, or selling any securities or financial instruments. With that, let me hand over the conference to Kunal Raj Singh, Head of Investor Relations. Thank you, and over to you, Kunal.
Thank you, Michelle. Thank you, Himanshu. Good evening, everyone, and welcome to the second quarter FY26 earnings calls of Billionbrains Garage Ventures Limited. Our financial results and shareholders' letter have been published on the exchanges, and the information pack has also been uploaded on the company's IR website. Before we begin, I would like to remind all the attendees that certain statements or comments made on this call by the management, which reflects the outlook for the future or which could be deemed as forward-looking, may involve risks and uncertainties and are not subject to any review or procedures. Such statements or comments are not guarantees of future performance, and actual results may differ. Joining me on the call today are Lalit Keshre, Co-founder and CEO, Harsh Jain, Co-founder and COO, Neeraj Singh, Co-founder and CTO, Ishan Bansal, Co-founder and CFO, and Lalit Bhimani, Group Head Finance. With that, I now hand over the call to Lalit to share his opening remarks.
Hello, everyone. First of all, thank you so much for your belief in us. We started Groww more than 9 years back to make investing simple, transparent, and delightful. Our philosophy has been to always build, always do right by the customer, keep building for them, create the best product experience, and then with that philosophy, we have got immense love from our customers, and we are super grateful to them. Although it has been more than 9 years, but we still feel that we are just starting in our journey. And because this is our first quarterly call, I want to kind of touch very briefly on our product roadmap for the future. And over the next many quarters, you will keep seeing us. Keep listening the same thing, same kind of themes. The first thing is as we see India, how we grow and how financial markets grow. Groww, your company will kind of continue spearheading this democratization of financial services in the country, and our obsession to build the best customer experience kind of will continue help us getting a lot more customers, and that would be our highest priority going forward. And then as customers join us, they build their wealth, they continue buying more and more products. So far we have built 10 plus products on the platform, but good thing is that there is a long roadmap in front of us and we will continue building multiple products. With multiple products, customer engagement continues increasing, retention goes up, and then when customers love your product, monetization also follows. We build the platform from the customer perspective, and that's what kind of also creates like a pull for us. Lastly, with the brand that we have created, but the deep investment in technology that we are doing also create an enduring competitive advantage for your company. That's all I wanted to say today, but we'll be very happy to answer your questions in this first quarterly call. Once again, thank you for joining us in this journey in building India's largest investing and wealth platform. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may click on the raise hand icon. Before asking the question to the management, please introduce yourself, providing your name and your organization name. Please limit yourself to a maximum of 2 questions so we can accommodate as many as possible. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please click on the raise hand icon to ask questions. The first question is Prayesh Jain. Please accept the prompt on your screen. Unmute yourself, introduce yourself and proceed with the question.
Yeah, hi everyone. This is Prayesh Jain from Motilal Oswal. Congrats on a great set of numbers. Just firstly, a bookkeeping question on the orders that you've given. Can you split that up for us in terms of cash and derivatives? Second question is on the CAC, right? We've seen a significant increase in CAC, and how do you see this kind of progressing going ahead? I'm restricting to those two because we have the limit, right?
Thanks, Prayesh. Let me take this question. I think we already shown our revenue split across derivatives and cash. And if you look at the pricing is very simple. We charge 20 rupees on the derivative side. Rest is on the cash. So the split is actually very similar. So roughly you can say 70% will be on the derivative side and 30% will be on the cash side. And on the question on the CAC side, I think Harsh, you can answer.
Yeah. See, part of our growth, the cost to grow that we report, is part of it is a branding, which is a fixed cost, and some part of it is in the variable cost. So if you see different quarters, it depends. The CAC will also be a result of how many new acquisitions happen in that particular time frame. And going forward, across the year, it then normalizes. So there's variation quarter to quarter you can see depending on the time and the situation in the market.
But on an annual basis, do you think that we can, what level we were in, say, FY25? Right now that's completely gone away, and we will possibly be at a more higher number on an annual basis. And what should be a annual number that we should think about from a CAC perspective? I understand that. I think what you mentioned also, that CAC should be looked from a full year basis rather than just on a quarterly basis. So from a full year perspective, what should be the kind of CAC that we should think about from a I understand that additions would come as they are, but from an absolute spend perspective is I'm looking for.
So, Brish, it's difficult to predict for the future, but I would say that it's not going to be very different from the overall spends are not going to be very different from the previous times. And acquisition overall numbers also depends on how the market conditions are.
Absolutely. Great. I'll come back in the queue. Thanks.
Thanks.
Thank you. We'll take the next question from Jayant Kharote. Please accept the prompt, introduce yourself and proceed with the question.
Thanks for the opportunity. I'm Jayant Kharote from Axis Capital. Hey, Lalit, so 2 questions, both regarding lending. First one is on MTF. We have seen strong growth over here. I think given the number, the yield number is looking slightly higher than 15. Is it an end of period issue? One is that. And broader question on MTF is the aggression by the competition, right? Over the last 3 months, it seems everybody's now jumped into this product. We have players offering it at 7.99 very aggressively. So both from a yield as well as a growth perspective, how should we think of competitive landscape for MTF, not just for a quarter, but given our aspirations over the next 2-3 years, what is the strategy that you would use? That is the first question. I'll follow up with the second one.
Yeah, so let me take this one. I think MTF for us, the yield part that you talked about, I think will be again end of the quarter kind of a difference. Our pricing is simple, it is 14.95%. Other than that, the growth rate, I think it's not very, we don't see competition from a MTF perspective specifically because it is a second product typically that customer is using. Before that, customer is already there on stocks, and some of those customers actually start doing MTF as well. What we have seen in other products as well, the pricing is not the reason why customer chooses a platform A versus platform B. The experience is what matters to them. And over a period of time, typically customers end up doing more and more products with the same platform. The reason to selection can be different for different customers. But in the end of the day, pricing is least of the concern when looking at the selection of the platform.
Okay. The second one is around LAS. You have started this product now. What is the experience? How is the run rate? And how long do you want to wait before you press down the accelerator on this one? Or it will be a calibrated run rate of the kind that we are seeing for the past 1 month?
So it is very, LAS is very early stage today. So if you look at LAS is actually not even fully LAS, it is just loan against mutual funds as of now. Loan against securities is yet to be launched. So what we have seen is there is like a lot of features and kind of different, you can say optimization on the product side yet to be done. I think as we keep on doing some of these features, the growth will keep on scaling up. We generally don't look at like accelerating or something. Some of this is like adoption from the customer perspective. As the customer's need on the LAS side keeps on increasing, this will kind of keep on going up. What is happening is this is a AUM product, very similar to MTF. When we started, MTF was also started like almost more than a year back. And that time MTF also was going up slowly, but over a period of time it has become larger. So we think LAS also will take some time for us to kind of come to a product where the scale is larger, and hence the growth rate of the disbursement will keep on happening.
Sorry, if I could just squeeze one supplementary sort of encapsulating these 2 points only. If you can give me a broader 3-year outlook, where does your lending book look like?
So difficult to project again from a forward-looking perspective. But what we have seen is, especially on the MTF side, our growth rate has been really good in the past. And what we are expecting in the future is that we have a fair share that we want to kind of reach. And it will take at least 3 years to probably reach there. And the fair share is significantly higher than where we are today, probably like a double-digit number on the market side, where it's not going to be like we are taking share from the market, but we think we will end up expanding the market by that amount itself.
You mean double-digit in terms of market share of MTF? Great. That is very helpful, Ishan. Thanks a lot and best of luck, guys.
Thank you. We'll take the next question from Nidesh Jain. Please accept the prompt, introduce yourself and proceed with your question.
My name is Nidesh. I am from Investec. I have 2 questions. Firstly, on the customer sourcing, can you share some breakup in terms of sourcing channel, whether it is organic referrals or performance marketing? And second question is on the revenue model in the wealth management, the acquisition that we have done and the plan that we have for the W app. What is the revenue model that we are thinking on the wealth management business?
Yeah, sure. So I'll take the first one and I'll answer that. So for us, see, organic is the biggest channel, and almost, I think we've reported also almost 80% people come organically. The other channel is primarily the performance marketing, which is digital marketing that happens, and a very small part of it is referral. But we're not running a commercial referral, so it's a more of a word of mouth through the app also. So these are the three channels how we get the acquisition.
So just to confirm, 80% is still organic.
Yeah.
Sure. Great.
And the second question, I think, Ishan.
Yeah. So on the wealth side, I think we are very early today. We did the acquisition on the Fisdom side, which the balance sheet got consolidated as of 30th of September, but the P&L will start getting consolidated soon. And roughly 3% revenue is coming from that business. And obviously that business is growing well, and over a period of time, the contribution will keep on increasing. There's a lot of integration yet to be done for us to kind of look at how actually it will perform in the future. And we'll come back to you in future quarters on the wealth side.
If you can explain the revenue model, it is distribution income, or it is the...
Okay. So on Fisdom side, it is largely distribution income coming across different 4 products primarily. One is mutual fund, regular mutual fund. Second is the PMS distribution, PMS and EIF distribution. Third is insurance distribution, and fourth is on the unlisted security side.
So you plan to carry on with a similar revenue model, or do you think?
So there are future products. So some of them are already launched. So for example, we have launched a PMS of mutual funds recently, and I think that part will obviously grow faster and will start contributing, where effectively we are charging the customer for the advisory under the PMS route.
Okay. Thank you. Thank you. That's it from my side. Thank you.
Thank you. The next question is from Dipanjan Ghosh. Please accept the prompt on your screen, unmute yourself, introduce yourself, and proceed with the question. Yes, sir. Please proceed.
If I look at your active FNO customers, and that has remained around 1.4 million for at least the last 2 or 3 quarters, despite the fact that obviously new customer acquisition run rate is very strong. So, in terms of when you do some analysis on your underlying customer segment and the new users who are coming onto the platform, in terms of the behavior of those customers, or in terms of potential new customers who can be coming in on the FNO side, what sort of outlook do you really have out there?
Lalit, you want to take the wealth piece?
Yeah. So Dipanjan, I think wealth, as Ishan said, we'll be talking a lot more about in coming quarters. It's just like we're just getting started. So all these kind of questions will become clearer. But how we look at it is it will be more, based on our DNA, it will be more tech-led and so on. But again, as I said, we are still kind of, the integration is happening, and it would be an interesting kind of product to build. And your second question was on the FNO. Ishan, you want to answer this?
Yeah. So on FNO side, what is happening for us, especially after the last year's regulation, is there is a churn in the users, which we saw specifically till Q4 last year. After that, there is a small growth rate. It is not showing up in millions, I think, but there is still a growth rate in users. But the quality of the user is doing really well. So if you look at the average order per user have significantly grown. Some of those numbers, you can look at it, will be kind of in the range of 10 to 20% growth on average order per user, which is primarily getting contributed because the high quality users are still there on the platform, not only still there, but are actually growing. But the low quality customers who were earlier placing significantly lesser number of orders, and the turnover was also significantly lower, is actually moving away from the platform, which is, we think, is a good thing both for us as well as industry. as it becomes more niche and will be only serving the high quality customers who understand F&O as a product better.
Got it, Ishan. Just one small follow-up on the first question. If you can just quantify your employee count for 2Q of this year and last year. That's all. Thank you.
Lalit, you will have that number, Vimani? Lalit, you are on mute.
So we have 832 core employees who are involved in product business building, and about 300 odd employees who are doing our customer services. And on the Fisdom side, we have acquired about 500 odd employees which have come with part of the acquisition. And out of this 500, about approximately 180 are doing sales for Fisdom.
Got it, everyone. Thank you and all the best.
Thank you.
Thank you. A reminder to all the participants that you may please click on the raise hand icon to ask questions. We'll take the next question from the line of Abhijit Sakhare. Please accept the prompt. Introduce yourself and proceed with the question, sir.
Hey, hi. Good evening. I hope I'm audible.
Yes. Yes,
my
sir.
first question was that, based on the commentary, when I do some rough math, it looks like the annualized ARPU of the customers that we've acquired in the last quarter is probably close to the past vintages. I just wanted to double check if that observation is right. Secondly, the second question was that there was a number mentioned in the press release on the disbursements in the credit business. It's slightly different from what you've disclosed in the data book. So I just wanted to double check in the data book the disbursement number on for credit Groww Credit Serve was about 3932 million, and in the press release it was somewhere close to about 1500 odd million. So I just want to clarify that as well.
Ishan, you're on mute, huh?
Yeah, sorry. On the first question, I think, on the second question, I think we'll check the data and come back to you. My guess is the difference is between one is a PL number and another is a overall GCS number. So that might be the difference. And the other one will be like a LAS related number. On the ARPU side, actually, it's very difficult to look at ARPU on a quarterly basis. We've seen that over a period of time things change, and hence we look at ARPU on an annualized basis. But you are right, the quality of the user that we are getting today looks similar to what we were getting earlier as well. It's not like significantly different from in the past as well.
Got it. Thank you so much.
Thank you. The next question is from Saket Karan. Please accept the prompt. Introduce yourself and proceed with the question.
Yeah. Hi. Thank you everyone for giving me this opportunity. And I'm an individual investor. And my first question is, what is the expected contribution of the FinVisa technology acquisition to Groww consolidated financials and the operation roadmap? That's it.
So currently, like I said, roughly their run rate from a revenue perspective is around 3%. And on the contribution side, I think they're still negative, more way like break even, closer to break even, but still negative. And hence on the bottom line side, I don't think they will add anything to Groww as an overall platform. On the roadmap side, I think Lalit already talked about that there are still an integration that is happening between
seeing Saket.
Okay. Thank you guys. Thanks.
Thank you. The next question is from Anshuman Dev. Please accept the prompt, introduce yourself and proceed with your question.
Yeah, hi. Am I audible?
Yes, sir. Please proceed.
Yeah, hi. Thanks for the opportunity. This is Anshuman from ICICI Securities. My question is regarding your new users who are coming onto the platform. I see an increase.
I think we'll think a bit differently here, right? So as I said, like the way we look at it is that we are building India's largest investing and wealth platform, and there are multiple products. Some products will have, and different products have different monetization kind of methods, transaction based and now also some amount of AUM based and so on, right? And that is how we look at it. Like we don't kind of design this way, okay, this is less monetized product, let's monetize in more and so on. We look more from the value proposition for the customer and also building the entire basket for the customer. And we have to accept the fact that there will be some products that will be kind of, there will be some products which either will be have lower monetization or will be monetized in future and so on. But I think the fundamental kind of way we think about it is building a very, very kind of customer focused platform, building entire kind of wealth of the customer there, keep building multiple products there and keep building better and better